Hola a todos, de nuevo hoy estoy con Alberto Mera, todavía me está aguantando, eso es bueno, todavía queda mucho, así que tiene que aguantar. Hoy tenemos un invitado muy especial que conocí hace algunas semanas cuando estuve en Ámsterdam en la conferencia de Bitcoin. King es CEO de una empresa que se llama Treasury, que es una Bitcoin Treasury Company, que hizo un movimiento bastante raro en el espacio que creo que no vimos antes. Directamente adquirió la conferencia de Ámsterdam porque le pareció que eso es muy buena manera de construir y aumentar el conocimiento dentro de la comunidad y comunidad to be, la que todavía no existe, y así atraer hacia el espacio de Bitcoin para instituciones y para Bitcoin para tesorerías nueva gente con nuevas perspectivas, por supuesto nuevos inversores, y creo que lo que nos va a contar es muy interesante de cómo funcionan tesorera, cuál fue su viaje, porque he tenido muchos baches, pero aún así salió súper bien, ¿no, Alberto?
Sí, la verdad es que es un señor muy interesante. Yo no lo conocía de nada. Lo encontraste tú y me dijiste, oye, vamos a hablar con él. Y yo en plan, este tío no lo conozco de nada, a saber. Pero luego la verdad es que es un señor muy interesante con una historia muy, muy buena. Viene además del tema este. Viene de finanzas y viene de la parte de la deuda estresada, en inglés sería distressed debt, ¿no? Que vamos a decir esa palabra mucho, por eso es bueno avisar.
Sí.
Pero sí, esa parte de las finanzas es muy, muy interesante, a mí al menos me gusta mucho. Y es curioso cómo dio el salto de ahí a Bitcoin y luego también el movimiento que me parece muy inteligente, ¿no? Como tú dices, en vez de montar una conferencia o lo que sea para ganar publicidad y ganar una comunidad, pues directamente te compras una que ya funciona
No se me
y
ocurrió.
así. Y así, bueno, es que tú no tenías nada que comprarte aquí en España.
No
Te vas
tengo
a
nada que
comprar la
comprar,
Watch Out,
luego la vendo.
pero te puedes comprar la Watch Out, pero tampoco es digamos, una cosa épica que tenga 5.000 personas como tiene la de
Sí,
Ámsterdam.
sí.
Así que no, fue un buen movimiento y por eso ha saltado, yo creo, a la palestra, por eso y por la compañía. Pero me parece que hay otros que, digamos, ganan fama de un día para otro y quizás no la tienen de todo ganado, ¿no? Pero sí, lo de King me ha parecido un tío muy. Bueno, pues
Muy
sabe de lo
interesante.
que habla y es interesante. Así que
Sí, sí.
nada, vamos ya con ello. Dale,
Seguro que
Aldona.
escucharemos más de él, pero bueno, mientras tanto, empezamos con nuestro podcast.
I think the mNAVs, my personal view has always been, and I've also said this to investors and everything, that in the middle of the summer, mNAVs were at really unrealistic levels, right? Because the moment a company starts trading at 3, 4, 5, sometimes even 7 or 10 times mNAV, it really means that investors who buy the stock there are going to lose money unless the company continues to trade at these mNAVs or higher, or Bitcoin makes some crazy run, right? But those things didn't happen, and were also quite kind of lower probability to happen, and therefore people may lose double money, right? The mNAV compresses, and also if Bitcoin then goes down, it really accelerates. I think, frankly, where we've seen the market go now is a very natural development. Like anything in crypto, things move super fast, right? It's almost like our sector has matured within a year, where a normal sector takes maybe 10 years to mature. I think mNAVs coming down, why would you as an investor pay anything above the value of Bitcoin? It's because you basically expect this company to create value for you.
All right. Welcome to the next episode of Mad Bitcoin Business Podcast. Today, I'm again with Alberto Mera as a co-host, and we've got very special guest, Khing Oei. King, thank you so much for joining us today.
Thanks for having me. Great to be here.
Yeah, thanks for being here with us, and nice background you got in there. Are you based in Amsterdam, right?
Yes, we have an office right in the center on the canals, so very nice actually to be here.
Which is a good segue, I guess, no, Aldona, for the Amsterdam thing.
Yeah, it's wonderful. I just been there like a few weeks ago, and I did a lot of work. I visit some companies that are based there, so it's like a wonderful place to really stay. I don't know, how do you focus on working with those views from the window, but All right, King. So for people who haven't followed your journey yet, can you give us like the 60-second version of how a Dutch distressed debt investor who ran multi-billion credit book at Highlands and became the largest claimant in the FTX's bankruptcy ends up founding Europe's first main market-listed Bitcoin treasury company? Can you please give us a little bit insight of this journey, how that happened?
Sure. No, thanks. I'll very briefly. I grew up in Amsterdam, studied econometrics, then moved to London to work in finance. I started at Goldman Sachs, where I ended up in the distressed investing group. And I've really been doing that sort of strategy for most of my career. At Goldman, at Fortress, I ran my own fund for a while. At the end of that, I became super interested in Bitcoin. I can talk about how I got orange pilled, but I really got into Bitcoin in sort of the 17 era. In the last 8-9 years, I've been doing a combination of traditional finance and crypto related work. The last few years for a large London-based hedge fund where we were very early and became the largest investor in FTX. And really that combined my sort of experiences both in distressed investing, because it was obviously a bankruptcy, and also with crypto. And also in Genesis, the other big bankruptcy of the last few years. And then earlier this year, I saw obviously the Bitcoin treasury space and the broader DAT space really taking off. And it to me became very clear that it was a big opportunity to start one in the Netherlands, in Amsterdam, and with the ambition to become the largest in Europe. And that really led to it all happening.
Great.
Nice. I am particularly interested in the distressed debt thing, which is I think one of the main subjects in today's economies and today's let's say environment for as to how companies are set up and the situations in most of these treasury companies. And I wonder, from your point of view with a career in distressed debt, how do you see treasury companies today in terms of the situation with the debt, and how do you see them, or how do you go about evaluating whether they are in a good situation or in a good position to go and service their debt commitments?
Sure. No, it's a great question. As you said, very relevant. Obviously, the big innovation that really Michael Saylor and MicroStrategy started is digital credit, right? Issuing different kind of debt instruments for a Bitcoin treasury company. And that in itself is new and a great and a huge market, right? And we're still very early in that market. But like always in the whole key about distressed investing and everything that's happening around it is, when does a company become stressed or distressed? It's when it has too much debt. As simple as that, right? It could be actually individual, or it could be a company. In our case, it's companies. So too much debt, and that leads to one of two issues. One, cash flow issues, where it cannot repay its obligations, its current interest obligations, or a liquidity, a actually sort of solvency point where debt needs to be repaid. It's obviously a balloon. Normally, a company would refinance that, but it can't do that because the market is bad or another reason, and then it becomes distressed. So it could be happening along the way if it cannot pay interest, or towards maturity of the debt. And that comes back to the point of companies always needing to finance themselves in a prudent way, taking those two things into account, right? And I think there's different metrics to look at that. I do think for Bitcoin treasury companies, the simplest is really the amount of debt versus the Bitcoin that you hold, right? Because you always know how much that is. And then obviously, then it becomes almost like a magic formula of those two things coming together. Because if this particular treasury company doesn't have any income, then it means it will have to be able to pay the coupons of the interest every year, basically, right? And so it needs to have a strategy to do that. And obviously, we've seen a big announcement from MicroStrategy very recently about a reserve they've put together for all the coupons they need to pay, because the market was getting a bit fuddy about their ability to pay interest. So that's one way to do it, because MicroStrategy has always been quite clear in that they hold Bitcoin, but they don't actually do anything with that, which is their vision. And also their other businesses are tiny, so they don't have actual income to pay for the interest. So they have to do that. Other than that, their normal strategy would be to actually raise equity, right? To raise equity to pay for the coupons. which some in the markets don't like. That's why they took this measure. I think the second thing is then the maturities, right? And there's two scenarios. If you think about convertibles, the convertibles that MicroStrategy has, and convertibles are typically the easiest instrument to issue for a treasury company because it's a bit like selling equity. But the convertibles, there's two ways, right? If the moment the convertibles matures, it's usually 5 year, then the holder of that convertible, it's simple math. If there's a certain conversion price on the stock, so if the stock is in the money, right? If it trades above the conversion price, that's clearly what you're going to do because you're going to make immediately that markup. So then you're gonna convert, you're gonna get equity, and that's an attractive trade. But if it's not, then you have a bond, and then you get your money back, right? That's why, from an investor perspective, a convertible has features which are very attractive for some investors. You essentially buy equity in the future at a premium, but if it trades higher, you're happy to have paid a premium because in return, you get the downside protection of having a bond that repays you the principal. Now, the downside scenario for a treasury company is if in this 5 year period, the stock is down a lot, and that could be because the Bitcoin could be down a lot, right? It's possible. And then clearly the holder will not convert, so they want to get repaid. And then you need to have enough Bitcoin to be able to repay. Because in that market environment, it's possible that you can't refinance it, right? Some markets you can refi yourself, but some you can't. And you got to think about all these real downside cases. Credit investing is all about downside, right? About getting all the downsides together. So we're talking about a bad market for the stock, bad market for Bitcoin. You can't refi yourself. Then you still got to be able to do it. And then the only thing you can really do is sell Bitcoin to repay. So in an example where your convertibles are, say, half your Bitcoin, suppose you have 100 million of Bitcoin, you issue 50 million of convertibles, the margin of safety is not that large because Bitcoin could be down 60%. And then actually you have less Bitcoin than the value of your convertibles, which means your equities were zero and you probably have to do some sort of restructuring. So coming back to your question, it's all about making sure that the type of instruments that you have and the quantity are a good fit with your business model and with the quantity of Bitcoin that you have.
Yeah, it's a tricky one, I guess, and it varies from company to company and from situation to situation. I guess, it's a difficult one, and I wonder if that's the reason why strategy and the others are moving towards preferred equity and stuff like this, which eliminates the issue of having to come up with the money to pay back the notional.
Very good point. So the beauty of these perps, these pref securities, they're perpetuals, so they never mature. The other side of the coin is obviously that their coupons are fairly high, right? Somewhere between 9 and 12% for strategy, and strategy is the best issuer, so that's already on the low end. So yeah, the good thing about it is you never have to repay it, but it's a perpetual obligation. And the theory behind that is obviously it's a bit like an arbitrage. Bitcoin historically has accrued at called 30% per annum over time, and that's sort of a projection of I guess many people in the space. It's like, okay, this is going to be over time a pretty high accrual. So you earn 30, but you pay 10%, so that works, right? And it does work if indeed that happens, and you can issue shares at a premium to pay for those coupons. Where clearly it becomes more difficult if that doesn't happen, then you still have a pretty hefty bill. I've got to say the quantity of pref securities that strategy has is actually in the end fairly limited compared to the Bitcoin balance they have, right? They got obviously more than 650K Bitcoin, and they've issued, I think, about 7 billion or so in these pref securities. So the interest bill is fairly large in absolute terms, 700 million or so. But compared to their Bitcoin, it's actually quite limited. And that's also their point, right? They're saying, look, we have 74.4 years, I think, of Bitcoin to pay these coupons.
At these prices.
Yeah, at these prices. Exactly. Good point. So that's a balance. But yeah, it's very interesting. It is a nascent market, right? It's a market that's really developing. The way that these trade is developing, the way people look at them, the way people compare them. And also it does come in a bit more of a choppy Bitcoin market. So it's very good to see it now happening. And I'm also convinced that as strategy is making a few changes to the way to communicate this and like this reserve. As the other is happening, it's only going to make this market stronger and set for real growth. But I do think the credit markets, digital credit, is a massive opportunity, right? It's one of the big ways that that treasury companies bring traditional capital into Bitcoin, and especially in Europe, where the fixed income markets are so large, it's a really big opportunity set. But like any of these markets, it needs to sort of go through a bit of learning, a bit of development, and a bit of understanding as well. I think a big chunk is still understanding on the investor side too.
Yeah. Yeah, I think this understanding side is still like very immature. Yeah, as you said, if you look at the numbers, the normal investor should not worry, at least not that much, if he releases the numbers, if he sees this coverage of this dividend payment that is secured for more than 70 years, as you said. However, there are still lots of critics, but Michael Saylor is a very intelligent man, and he just tries to adapt to the signals from the market, and he just created this reserve of cash, just to cover, for 2 years these payments of the dividends. I think it's a smart move. The market is like more calm now, but I think it's what you say, the education, and then with each and every new instrument that will be issued, there will come like more learning and more adaptation to the market and how the market reacts. Yeah.
Totally,
Yeah.
totally, absolutely right.
Yeah.
Yeah.
And what do you think about all these companies that are now like a little bit struggling? This famous mNAV KPI that is now invented for these Bitcoin treasury companies. There are some that are like, with this mNAV is far below for what it used to be when they started. You think we will be seeing in the future more mergers between some of those treasury companies? We're going to see more of them selling their Bitcoin and not being that maxis in terms of I hold it forever. What's your take on it?
Distressed
Sure.
treasury acquisition.
Yeah,
Yeah, exactly. That's like
yeah.
one. You start to answer. But no, I think the mNAVs. My personal view has always been, and I've also said this to investors and everything, that in the middle of the summer, mNAVs were at really unrealistic levels, right? Because the moment a company starts trading at 3, 4, 5, sometimes even 7 or 10 times mNAV, it really means that investors who buy the stock there are going to lose money unless the company continues to trade at these mNAVs or higher, or Bitcoin makes some crazy run,
Yeah.
right? But those things didn't happen, and were also quite kind of, lower probability to happen, and therefore people may lose double money, right? The mNAV compresses, and also if Bitcoin then goes down, it's really accelerates, and on the way up too, frankly, right? So I think, frankly, where we've seen the market go now is a very natural development. Like anything in crypto, things move super fast, right? It's almost like our sector has matured within a year, where a normal sector takes maybe 10 years to mature. Ours has done it in a year, got from a hype cycle to sort of consolidation phase, if you will. So point being that I think mNAVs coming down, it was a very natural development and bound to happen. What is mNAV, right? Why would you as an investor pay anything above the value of Bitcoin? Is because you basically expect this company to create value for you, right? Whether it's through a combination of issuing credits, as we just discussed, doing something on the asset side, being able to issue shares at a premium. It's a bit reflexive, but those things create Bitcoin per share growth. And, you have an option as an investor, right? You can put your money into Bitcoin spot, you can put an ETF, or you can buy a Bitcoin treasury company, assuming you want Bitcoin exposure. So why would you do the latter at a premium? Only if you expect this company to outperform the others. And outperforming means adding Bitcoin per share over time through the mechanisms which we just described, which is mainly issuing credit and issuing shares through ATMs. So for companies that are well run, have the capacity to do this, it makes sense for them to trade at a premium. Now, what is the right premium? I'm pretty sure it shouldn't be 3 or 5 or 7 times, but somewhere above 1 for sure, right? I think that would be deserved, and companies that they should earn it. Actually, they have to show that they can do these things, and then it's a deserved premium above NAV. So where we are now is that there is some beta to this, because in Bitcoin obviously being choppy and down the last month or so, premiums themselves have come in, so there's a double effect. And now we've seen the playing field, I guess, to some way, sort of looking at, okay, There are some companies that are fairly small. It's going to be probably pretty hard for them to raise credit, but also raise equity because they're already trading below NAV. And that's a tough spot to be in, right? And I think it's not entirely unlikely there'll be some sort of consolidation because probably shareholders will demand it, right? If you're a shareholder, the whole game is that you buy into these companies because they trade above NAV. Otherwise, I would have just bought Bitcoin or ETF. And now they even trade below NAV. So you trade below the value of your Bitcoin, which means that the market is telling these companies that there's actually negative value to them existing, right? There's negative value because of the cost, the overhang, and everything else. So that means that with proper corporate governance, these companies should do something, right? And some of them be trying to close that gap by buying back shares. That's obviously the beauty of a corporation that's listed. You're in charge of your own destiny. You can do things. You can sell shares when you trade above NAV, and you can buy back shares below NAV. So some of them have, gotten borrowing facilities lined up to buy back shares. I followed a few of them, but typically the reaction has been, it's not like a company announcing that immediately the share price goes up and closes the gap. And I guess it's a kind of a function of impact, right? I guess some of these, the size of this buyback program is probably deemed not big enough to close that gap. So that's what we've seen. And again, to the point, I think at some point shareholders will any good company obviously has its quarterly meetings and analyst calls and talks with investors, investor relations, and management will be sort of getting the message and the feedback from investors that they need to do something. So I think consolidation is one way, and or share buybacks. And I guess presumably even in some depressing cases, maybe even makes sense for the company just to not be a listed company anymore, right? And do something else with it, right? Mm-hmm. Like we've seen in traditional industries as well. If a company, if at some point it doesn't make sense to be listed, it gets taken private one way or the other. Yeah. And this is kind
it's also very expensive to have a company listed.
Totally. In the US, it's a few $1 million at least to be listed. All the compliance, everything else around it. It's again. There has to be a good reason for a treasury company to exist, to be listed, because there is overhang. There's including the cost of being listed for sure. So yeah, I think coming back to your question, I think we're in that phase where things are starting to sort of settle a little bit, and we'll probably see what's going to happen with those that trade below, any potential moves that are going to happen, consolidation. I think, frankly, this will also become a bit clearer, as the market probably stabilizes. The market is a little bit in sort of year-end volatility right now, which is part of life. We've seen that in Bitcoin. It's very normal. But don't forget also, right? A lot of the good thing about this year is that we've seen a lot of new capital in the space, as in we've seen even not just this year, but right before, ETFs growing. There are strategic Bitcoin reserves. There's obviously the whole Bitcoin treasury space, which means different sources of capital are in it. And also some of them maybe have not been used to that volatility that we've seen. For us, if you've been in Bitcoin for a while, then the volatility we've seen is actually, frankly, still quite muted, right? From a peak of called 125 to where we're in this cycle, the lows of low 80s. That's it's part of life if you're a Bitcoin, and nothing crazy. But for more traditional investors, it's a huge move actually, right? So and that has some impact too.
En España, hasta hace muy poco, casi nadie pensaba que una empresa cotizada pudiera dar un giro de 180 grados y centrar su estrategia en Bitcoin. Pero Bitcoin no es solo un activo para unos pocos. Es un activo abierto, global y cada vez más relevante para todos. Desde el mundo institucional también toca empujar, no solo en Estados Unidos, también en Europa, también en España. En Vanadi decidieron cambiar el rumbo. Hoy cuentan con 193 bitcoins en tesorería y tienen aprobada una capacidad de inversión de hasta 1.000 millones de euros para seguir construyendo una tesorería pensada para el largo plazo.
That is probably there is a movement now to offer these fixed income products that are based or backed by Bitcoin. And you mentioned this that this could be a big thing in Europe, because Europe is a place where people they just love fixed income. They're not so much in love with volatility or risk or stuff like that. So they prefer to get their 5, 6, 7%. I mean, if it's like 10%, it's already probably very risky, but something like 5 or 6%, Europeans are happy with. So how do you see this sector evolving in Europe in particular? Because we talked a lot of Americans, but not too many Europeans.
Yeah.
So how do you see the Bitcoin fixed income mix or combo happening in Europe, if you see it in any way?
Yeah, no, look, especially at the institutional level, that's going to make a huge difference, right? Because as you said, the institutional investor market in Europe is massive, right? We've got obviously very big pension systems, big insurance systems, et cetera, et cetera. The biggest investors, institutional investors, are in that sort of zip code. And within those average portfolios, fixed income is a very large allocation. As you said, it's more of a fixed income culture as opposed to an equity culture, which the US has. And again, I'm from the Netherlands. I did my master's thesis actually at APG, which at some point was the largest pension fund in the world. Now it's been overtaken by the Americans and the Canadians, but it's still a very large pension fund, one of the earliest ones. And its strategies are very fixed income based. So the pref securities market, which obviously where MicroStrategy started issuing instruments in, is very developed in Europe. The banks, the insurance companies have always been issuers. It's even about double the size, right? About 350 billion versus 180 in the US. So that market in itself is an attractive market. It's also an interesting one because it's on the lower end. It's sort of the riskier end of the fixed income market, right? It's also why it pays higher coupons. So to me,
when you say high, is it like 6, 7, or is it like close to 10?
More like 10, yeah. So obviously the MicroStrategy ones are around the 10 zip code, right? Plus minus 2%. But also in general, the pref securities, right? If ING, a Dutch bank, has a pref security, it's usually high single digits as well, right? Because it's the way it ranks in the capital structure. You have equity, which is full on risk. It's right above. So it's much high. So it's higher risk, and also that's much higher return than the senior bonds that, for instance, insurance companies or banks issue.
That could be problematic, no, for Bitcoin companies, because there's not so much, because in the case of the Bitcoin prefs, you can of course offer that 10% or 12% even, counting on that asset appreciation of 30% on average, which is still an average, and it's not certain either. So that it doesn't give you that much of a margin. And if there is currently equity, preferred equity paying 10%, 11%, you probably have to pay larger than that. You're going to have to pay maybe 15, but you don't have that much margin, don't you think?
Sure. No, yeah. Sorry, I was referring to when I mentioned 10 plus or minus, I mentioned the MicroStrategy ones. No, the European prefs are more in the high single digits.
Okay. So like 7, 8. Okay.
Yeah, it's lower, exactly. So there's still room above that. So that's why I'm actually very excited about it. The market is very large, it's very yield hungry, right? Yields are coming down in general, and all these pension funds, insurance companies, etc. They also have quite large liabilities to take care of, right? All their policyholders and pensionados. So as a liability management is a huge thing for them, and there's a constant hungry for yield to make sure they can pay the liabilities. And so for in that context, to be an issuer of higher coupon prefs is an attractive market. It's still nascent, right? Obviously, MicroStrategy did the first one, 12.5% STRE, and about 600 million. So that's a real great start and opening up the market. And what I've seen is the European market is obviously very wide and diversified. But if you are a European portfolio manager and you're looking for yield, and you're also looking potentially even for some sort of Bitcoin exposure, it's actually very hard to get that, right, with the European mandate, because there's very, very little product in Europe, whether it's both equity or credit. So both for equity portfolio managers and for credit portfolio managers, I think it's a very attractive proposition to be a European product, where European equity that can offer that exposure through an equity instrument. So it's regulated, it's liquid, it's on exchange, etc. It's easy to buy, literally click. or for fixed income instruments is the same, right? So I think it's a big product market fit, and especially as you said, given the size, right? Because there's so much demand for this, and very little issuance, and people are still in the general investor space. There is always a home bias, right? People like to trade in their own currency, their own home markets, et cetera, right? So why the U.S. market is massive in its own right, and strategy is obviously the grandfather of all of these instruments. I think there's still a lot of room for a European issuer to take that playbook and expand it here, and it's both on the fixed income and on the equity side.
Yeah, well, there's a home bias and there's a cost bias, no? Because I mean, you see a year like this where the euro, where the dollar went down a lot. I mean, all your return is gone if you
Great
were
point. Absolutely right. Yeah.
if you were
That's
investing in
interesting.
dollar. Yeah.
Yeah.
That's a funny thing, because obviously we always talk about fiat debasement, and one of the reasons why we like Bitcoin as digital gold. So for us, it's almost like if you think in Bitcoin, the way that euro dollar trades or sterling euro, it doesn't make a huge difference. But actually within those currencies, it makes a massive difference, right? I mean, they're all going down against Bitcoin over time, but it does make 10-50% difference easily, which, as you say, could be a whole year, right? So
Yeah, exactly. For our audience, maybe they still don't know, but you bought very recently. You acquired Bitcoin conference in Amsterdam, which was congratulations, first of all, because it was a great event. There were like how many? 5,000 people gathering. Well, a
yeah,
lot of
thank
crowd.
you. Yeah,
The venue next year for sure you're gonna have to make a little bit bigger, because it was like, I guess, more people than the venue
yeah.
could even accept. So it was a huge success. So congratulations on that. But my question would be, why Treasury decided to make this move and acquire Bitcoin conference? Do you see it as a strategic move for your next steps in progressing in what Treasury really is? Is it like a nice have or must have nowadays?
Sure. No, it's to me, a treasury company has a couple of purposes, right? And obviously the main one is to accumulate Bitcoin, increase Bitcoin per share. But the other one is also to build community, to educate, to bring, and also as part of that, for the stock to be recognized, it is important for you to be out there with your name, right? So all of those actually really, also the benefits we're getting with buying a conference. We're being a great community together, both Dutch but also international. Great speakers, more than 150 from all over the world. As you said, great energy, and it's great you were there. And we all had a great time. We all learned for 2 days. At the same time, it was obviously very good for our name to be out there, essentially being the main sponsor, being the owner of the conference, and build from there. So I think it serves both the purposes. So for us, it's very important actually to have that, because I see, again, being a treasury company not just as hodling Bitcoin, but also building the community, building adoption. We're still behind in Europe, we're still behind in the Netherlands. It's great, it's an upward trend, but there could definitely be more. And I've got great feedback, actually. There's literally people said, look, I just checked it out. I saw some ads. I want to see it. And, I get such great vibe, very different from what I expected. I'm going to, I started, getting involved with this because of what I saw, and, families coming there. It's great to see that. So I think that broad adoption, I think that's also in general, the whole, what I like about being in a Bitcoin treasury space. And it's also certainly the way that Michael Saylor has philosophized it, is that we are within the space. We are not really competing with each other. We're all building the same thing. We all want the same thing. We want more adoption, more strength for Bitcoin, more inclusion in the ecosystem. And the key thing is to just build and grow adoption, grow the community. And that's obviously conference is a great tool for that. I've seen it, and it's funny you say that. The good thing is this obviously, it was an old sugar factory where we held it, massive space. And the beauty is we only used half of it. We can still use the second floor, which is the exact same size. There's massive old sort of sugar kettles. They're as big as this office room. And so we can easily expand and make it bigger, which we will actually. So yeah, we're super excited about that, and make it only even better next year, right? With even more and better speakers, more participants, bigger exhibition hall, et cetera, et cetera. I can only try to improve every year, but we certainly thought it was a great great first conference while we are owner with Treasury. And also a big step forward actually from even from last year is what we heard. So so very much an integral part of our business as we see it.
You're our second guest
It's
that is mentioning that, the community is a key and that the more we help each other, the better. You remember, I think Boyd Cohen told us in one of the podcasts that it's incredible how like CEOs of the treasury companies are calling each other and they're like interchanging playbooks and the ideas that is totally unthinkable in like the fiat world, yes, because it's like competition eating other competition, or you
Yeah,
win and I lose, or vice versa. But the Bitcoin is completely different. Yeah, so it's a beauty of it.
totally.
Yeah.
Yeah, exactly. Yeah, we invite all of them. We had panels together, all the other CEOs. So it's absolutely great.
Yeah.
Yeah.
you probably didn't do this for this reason, because I mean you just mentioned that you did the conference for outreach and for the community, but you can also probably make some money out of it. And I was wondering if you see the future of treasury companies being one which is linked to companies that have actual cash flows, because as you mentioned at the beginning, it's difficult to have to make the model work, or it's more challenging without cash flows than with cash flows. But the problem with the cash flows is that you have to invest or do some kind of activity that could potentially be less lucrative than just holding Bitcoin. So it's a continuous trade-off there. Like, do I invest or do I keep a business that brings me cash flow? So with the cash flow, I can pay the debt and stuff like that, or do I just put everything on Bitcoin? Like Sailor probably does, and the majority of them. So do you think in the future, is it going to be companies with cash flows the ones that do this strategy, or do you think that the Bitcoin only one is the one that that has more potential?
Yeah, a very important question. Also something that we talk about a lot in the team here and try to observe. Again, I think we're going through a bit of change and flux in the business model. It's just changing, right? Everything, the different players, the mNAVs. So I think it's very likely we're going to see, quote unquote, a few core models that the market will end up liking. And there's different philosophies in this. And my view is indeed that having some sort of cash flows, at least you sort of try to break even on your interest payments, is a very valuable feature. It's probably, if you think about the conference business, it's a great business, but if our ambition is obviously to grow this into a large treasury company, and it's going to be hard for the conference business to keep up with that, right? Because it's just, despite its success, it's hard for it to be a massive, in absolute terms, EBIT generator. So I think it's going to be a combination. It's going to be a combination of a few businesses. I think the nice thing is obviously when the business you have really has a relationship to what you're doing Bitcoin. That's why this is perfect, right? But they're obviously another natural marriage is mining, right? Obviously, right in the Bitcoin space. But then you get to sort of a bit of a difficult question, which I don't have an answer to either, is like, well, what does the market really like, right? It's so far it's been a model where the treasury company is 99% of the business and the rest is a bit of rounding error, but at least we can associate with something. But then in that situation, the real business will never have enough cash flow to pay for the interest. So then the question, okay, you make the real business a bit bigger, but at what point does it become confusing for the market or they don't like it? Because obviously the miners get valued very differently. The miners are much bigger in terms of real revenues and much smaller in terms of Bitcoin as percentage. And they're not valued like treasury companies, actually. They're valued like miners. So I think that's still something that we all need to figure out and see how that goes. And I think the good thing is the space does move very quickly. People are very innovative. The market moves very quickly. It's a very liquid market. So as we develop our own thesis on how to do that, we'll get feedback and we'll see how that plays out into the future. But I'm 100% convinced that there will be a very good model for this. And if you ask me now, I think it's going to be a bit of combination of some real businesses that have something to do with Bitcoin, like for instance, the conference. Perhaps mining is another one. And then getting some sort of utility out of your Bitcoin, I think, right? And we've done, we're doing work on that. We're seeing a few things that we think are interesting. I'm obviously, as a credit investor, always very conscious of the downside risk because it is very asymmetric, right? You generate some sort of yield on your Bitcoin, but if it goes wrong, your entire business is gone because no one will ever trust you again with your Bitcoin. So with their Bitcoin, it's very much one you got to thread very carefully. But there's certainly a few ways you can sort of, and the thing is because, again, the example we gave before, right? If you have 100 million of Bitcoin, I think something on the low end that also Michael Saylor does is probably 20-ish% in credit instruments. So that's in this example 20 million, right? And if that 20 million has 10% coupon, it's 2 million a year if you have perps only, right? So it means you generate 2% on your Bitcoin balance. So that's obviously quite small, right? So we're not talking about huge requirements to generate income to be able to pay for some of these liabilities. This example in real life doesn't work because it's in general too small, but just to make the numbers simple.
Yeah, it's interesting because I do, well, since the Treasury craze that we lived over the past, the 12 months, there's been a similar move in creating products and services towards or for these companies, and I've seen, I don't know, tens of pitch decks of, business propositions for treasury companies in order to make the Bitcoin work for them, right? Because they know that there's a number of companies that have Bitcoin and they don't make any money on it. And they're like, okay, I can make some money for it. I can, create some kind of interest, some yield. I can play with it. I can invest it. So I've seen innumerable pitch decks about this. But every time I see one of these, it comes down to the same thing. Like, first, if it's about investing the Bitcoin, you cannot promise any kind of yield on that. And if it's about lending the Bitcoin, you're assuming the risk of losing the Bitcoin altogether. So you mentioned that you're seeing a few potential ideas for making utility, making a yield on the Bitcoin. Have you seen anything that makes sense, or are you like me that I'm thinking that I only see like having lineage channels is the only thing that I see making some yield, kind of like low risk.
Yeah, no, it's fair. I'm also quite cautious when I see sort of proposals. Ultimately, you have to find your own way to do that. I think it's something you'd always want to do. Keep in full charge. You're not going to just take a product from someone else. I think, but I think the kind of structure that I've seen that is has to me acceptable risks is the one where essentially you lend, but it's fully collateralized or over collateralized by actually Bitcoin as well. And then you wonder, why did someone do that? Because that's real arbitrage. Because some people there is plenty of Bitcoin out there that people don't want to sell for a variety of reasons, right? Because the main reason would probably be taxes, because you would materialize probably a big gain, right? So, but you still need some liquidity. So you're very happy to, but you don't want to sell your Bitcoin. So you're very happy to give this Bitcoin as collateral, essentially borrow the same amount or a bit less against that, so you can use that or whatever. But if you do it in a fully custodial collateralized solution, then it means that as a lender, you feel pretty safe, because essentially you lend your Bitcoin. If the person for whatever reason doesn't give it back, well, you got to make sure you have clear an ironclad structure where you essentially take that Bitcoin from the counterparty. So I've seen a few of these structures, which I think are interesting. They're also not super yieldy because they're extremely low risk, right? Because I always think about additional counterparty risk, and because if you do this in a fully custodial solution, where you have essentially access to the wallet of the other person with certain constraints, then mainly that the person doesn't repay his Bitcoin, then I think that's an interesting structure I've seen actually so far. It is centralized, so it's not a DeFi ecosystem. DeFi clearly has a few things like that, but if you go in DeFi, then you just run other risks. It's very hard to quantify. Right?
There's the protocol risk, there's the contract risk, and there's a few risks.
Yeah, exactly. So I think that whole ecosystem, hopefully, that will develop over time. We'll get more confident on that, especially in the Bitcoin space. As you know, the liquidity is still quite small in all those on-chain solutions. So for now, the only things we're really seeing that are interesting are centralized, but that's fine. because you can still look at wallets in their own right, which gives you a very direct exposure to the collateral.
Interesting time
Sorry,
ahead. No, interesting time ahead. No, I'm listening to you because now
yes, well, actually,
we are so worried about the security now in the everything that is related to crypto, and no one is thinking about it when we are thinking about the fiat money. Have you ever heard any conversation about between two people like thinking about security of their money put in any other financial standard institution? No, but here, but it's fine. It's fine. It's like the brainstorming. I think it's good for the future and good for the trust, to build the trust for future. But yes, that's very interesting what is raising and what is expecting us ahead. I saw one of the product with the lending of Bitcoin that was like very, very focused on the person that is leaving his Bitcoin to get some liquidity will never lose his Bitcoin. And they were like adjusting the interest rates on a monthly basis. So if Bitcoin price is going up, they were lowering the interest rates. When it was going down, they were hiring the interest rates. But the Bitcoin itself was like totally secured. So I think we're gonna see marvelous solutions for the years to come, because there's gonna be like more and more necessary in the future.
Yeah, I think one interesting point is usually in the whole lending borrowing ecosystem within Bitcoin, it's one side is fiat and the other side is a crypto, for instance, Bitcoin, right? And then often you get price risk, right? You have to think about loan to value the whole time, because what if Bitcoin drops 50%, et cetera, et cetera. But the beauty in our case is we're actually long Bitcoin ourselves. So lending Bitcoin, taking Bitcoin collateral, it's not great if Bitcoin goes down 30%, but if it does, it's fine. Both go down actually, right? So it's not like we lose any additional money. So that's a real big benefit in this particular structure I was describing of the both sides, because usually any other situation you have to think about loan to value and all these triggers. And if you're long, you don't.
The only concern could be, I guess, if you're the borrower, you're borrowing Bitcoin, but you're probably not going to be using the Bitcoin directly. You'll probably, change the Bitcoin to fiat, maybe invest the fiat or use the fiat. And then at the end of the term, you have to come up with the Bitcoin to pay back. And if the price has gone up like 50%, then okay, maybe the interest is 2%, but you have to pay. You have to come up with 50% more money, more dollars or more euros.
Yeah, true. Very, very good point. Then obviously the person who was already long Bitcoin, he or she had his Bitcoin as collateral.
It's collateralized, yeah.
So it's at least it's there, right? You just have to pay, sell a little bit to make up for the difference. But yeah, that's true. That's true.
To wrap up, what would be your message for the CFOs of any public company that is like thinking of becoming Bitcoin treasury company? What do you think must happen, at the organizational level? Because I think there is like still like huge mistrust of all this kind of the structure. What do you think they should, what steps they should follow? How to convince them that they should at least try to investigate and try to make this bold move and become Bitcoin treasury company, which many of people that we are speaking about are indicating that it's going to be like the future of the companies. If company really in the future want to be the big one and competitive one, will have to become Bitcoin treasury company. So what they need to do in order to follow your steps of treasury.
Mhm. Yeah. No, I think there's two situations.
Mm-hmm.
One is if a company is kind of declining and needs to really find a solution to get itself out of that hole. And that's really how MicroStrategy started, right? The SaaS business was really declining, and obviously genius move, and we've seen what happened since. We've seen a few other companies like that. And I think in that scenario, I think with the right shareholder support, right, it's very important shareholders clearly support this change of strategy. It's a really interesting situation to do that. And you got to look at many things. You got to look at shareholder support, different stakeholders around you. Are you in the right market? What does the competitive marketplace look like? And if those are all sort of green flags, then it's obviously something that people should consider. And we've seen some companies do that with fairly short time periods, and then may not even that much of a long time thinking about it. It's sort of like, hey, we should do this, and it could be very successful. I think the other way is, I guess, a bit more opportunistically, like ourselves, saying, look, this is a market where there is going to be demand for a Bitcoin treasury company. We should build it here, and we build almost from scratch the whole structure around it, right? And there's different ways to do that, and I've explored them all at the beginning. You can do a reverse listing, like we're in the process of doing. You can do a fresh IPO in theory. You can do it through a SPAC, and a sort of a pipe, non-controlled. There's different ways of doing it. So, and then the important is really to do your research and make sure that the way that you end up choosing is a good fit for you, for your capital, for the market you're in, for regulation, and all of those things, right? And what is key in these things is obviously, to a certain extent, speed, and obviously certainty of execution as well, right? Because if you're, for instance, you're doing a deal with a shell, but you're not sure about the shareholder support, and you got to take time and convince them, et cetera, it creates more uncertainty around things.
Yeah.
So I think that's in general, but obviously I would highly encourage it. I do think that there is still a lot of room for Bitcoin treasury companies. I think also as the market's developing it, we'll probably see a few core models that the market can compare and sort of judge. And there's probably going to be room for all of them. I think at some point there will also be some saturation, right? We've seen maybe in the US where obviously a lot of them were issued. Arguably, now it's hard to do a Bitcoin treasury company in the US because the space is there. What's your differentiating factor, right? You got to have some sort of differentiating factor. In Europe, the space is still much more open, right? We're still quite early in that sense, and so are we in the rest of the world actually? So I think there will be sort of national/regional champions, and there'll probably be a few around them in maybe niche strategies. So yeah, I think the good thing is that's why I also tell I guess our investors and the team is that in many cases what we've done, it really feels like a startup because you're in a startup mentality doing that. But actually the beauty is it's not like you have to invent a new model and do your your A/B testing and figure out your TAM, because the model has been developed quite well. It's gone very quickly, but MicroStrategy has shown the way. We see MetaPlat in Japan, different ways. So it's all about execution, right? That's actually my key thing. It's all about execution, getting a great team together, great advisors, make sure you can execute well and fast. That's what it's going to make the difference in the end.
Yeah, very very interesting. I love the distressed part, and I think as you said, we're going to see a lot of evolution over the next few years.
Yeah, exactly, and it will only make Mark stronger, right? You get consolidation in, it will make it better. I think also better for investors. Hopefully, if those sort of distressed consolidations happen, it'll be good for both sides, right? It'll be good for the shareholders in that target company because they're getting you're getting a better valuation than what it was trading at, or they're getting shares in a new company that hopefully does better. And clearly for shareholders of the buyer, it's also hopefully good. So yeah, it's I think it'll be we had a great year in the space, and I think next year will be even more interesting and fun. So great to see it all together happening.
And what would be the success for you within 2 or 5 years? Where do you see Treasury? A little bit.
Yeah, no, obviously, hopefully we'll be one of the European market leaders in the space. That means also, really growing your asset base, growing both the equity market cap, being in a number of indices, growing the digital credit side of the business, being also clearly an outperformer of Bitcoin, right? Because that's the reason to exist, really, for a treasury company, accumulate and grow Bitcoin per share. So hopefully we'll that's what we achieve. That's certainly what we're working for and targeting. And then in general, right, as I said earlier, success for me also would be really growing the community, growing the ecosystem, increasing adoption, and making Bitcoin, and also as a Bitcoin treasury company, allowing Bitcoin to become more part of the economy, of society, and everything else around it.
Wonderful. So fingers crossed. I wish you all the best, Khing. Thank you so much for your time. We learned a lot. I will have to later on listen to it calmly because there's so much of the information. My head is exploding. So
Great. Thanks so much. Really good to be here. Thanks, Alberto and Aldona. Really good to be with you on the podcast.
Thank you so much. Thank you.
Take care.